How's it going, everyone? This video is going to be over advanced market structure. Now, if you haven't seen my video on basic market structure, go ahead and check that out first. I'll link it in the description below, as well as at the top right of this screen. Now, before we get started, I would like to give a shout out to the MMXM trader for his teachings on advanced market structure. So here we are in the PDF, and the first thing you have to understand is what is a short-term high and short-term low. Now, if you haven't seen my video on liquidity, I do explain this, so go ahead and check that out as well. But a short-term low is when we form a swing low, so a low with a higher low on each side of it. A short-term high is a high with a lower high on each side of it. So understanding this, what is an intermediate term high and intermediate term low? So looking at this bit of price action, you can see we have a short-term low here, a short-term low here, a short-term low here, and then we form a short-term low here. So when we have a short-term low with a higher short-term low on the right and left of it, this then becomes an intermediate term low. Similarly, with bearish structure, when we have a short-term high with a short-term high to its left and to its right, this is then an intermediate term high. Now, this is the first type of intermediate term high and low. There's also a rebalanced intermediate term high and low, and that is when price rebalances a fair value gap. So you can see here, price drops down into a fair value gap and trades away, creating an intermediate term low. Similarly here, price trades up into a fair value gap and then away, creating an intermediate term high. Now, what about long-term highs and lows? A long-term low is the low that is formed off the reaction of the higher time frame level. So for example here, this would be our long-term low. Now we look to our left and we want to find the intermediate term low. So we have a short-term low, and then another short-term low. But what is a short-term low? With a short-term low on the left and the right, that is an intermediate term low. Similarly, with a long-term high, it is formed when we get a reaction off of the higher time frame level. When it trades away, looking for an intermediate term high, we have an intermediate term high here because we have a short-term high on its left and on its right. So let's hop into the charts and go over a few examples of this. So here we are in the charts, and you can see we just swept this high right here, and we have failure swings resting below right here. So we are on a 15-minute chart. We sweep a high, so let's drop down to the 1-minute chart. So here we are down on the 1-minute chart, and you can see we have traded into that buy side liquidity on the 15-minute chart. Now you can see here we create a swing high, so this can be labeled as a short-term high. Now I want to wait and see what happens. As we move forward, you can see we form a low. I'm mostly interested in the highs here. We have another short-term low right here. Now we are breaking those lows right there, creating a high. Now, if we're going to form and validate this as a long-term high, I'm waiting for a short-term high on the other side. Here we form a short-term high. Now I'm anticipating this to become a long-term high, remain intact, and for price to trade to these lows. So the next thing I want to look for is a short-term high. Here we form another short-term high. Now, if we're going to form an intermediate term high, what do we need? We need price to sweep a short-term high and then put in another short-term high on the other side. Let's see if that happens. Now we have another short-term high, and the same thing. If we sweep this high, we can put in an intermediate term high. So here we get a sweep of this high. This is currently just a short-term high until we get another lower high on the right side of it. Now that we have a short-term high right here, this is then classified as an intermediate term high. Now, if you notice, we already hit our drawn liquidity or this low. So now that we hit these 15-minute lows, let's see if price shifts structure, and then we can mark out the structure going the other way. So let's take a look at these lows. We now have a short-term low right here. Now we are breaking this short-term high. Now this could be considered our market structure shift or break, but a lot of times I like to look for the intermediate term high to be taken to signify a shift in structure. So here you can see we now form another short-term low. This makes this what? Our long-term low. Now I'm waiting to see what happens. We're moving higher. We form a short-term low. Looks like we are going to right here. Now have a short-term low. Now, once again, over here, if we want to form an intermediate term low, I want to see a sweep of a short-term low and then a short-term low on the other side. Now we get a little sweep here. It's more so just equal lows for me. And there we get a sweep. Now this is just a short-term low until we put in a short-term low on the other side. We put in a short-term low, not yet. And here we get a short-term low. So now this is an intermediate term low, and this is a short-term low, and we are reaching for these highs. Now this low gets swept. Now why is that? Well, look at discount and premium. We go ahead and mark that out. You can see price wanted to retrace to a discount to then move higher. Now we have another short-term low here. This isn't an intermediate term low until we put in a short-term low on the right side of it that is higher. Now we're moving up. And here we have a short-term low. So this is now another intermediate term low. Now just taking a look at this section price, you can see our long-term high and our long-term low are formed off of higher time frame PD arrays or points of interest. Once we get a reaction out and put in a short-term low on the right side of it, so you can see the short-term low here, this short-term low here, and then trade away, that is when we validate our long-term high or long-term low. Then I am searching for an intermediate term low on the right side of that. So you can see here, waiting for an intermediate term high, we don't get that. Here we get the sweep and the intermediate term high, and that is validated when we get a short-term high right here. Similarly, right here, we have a short-term low. It is swept. Then we form a short-term low on the other side, validating this as an intermediate term low. But we also have a swing low right here that is swept, creating another intermediate term low when this short-term high is formed. Let's hop into our next example here, and you can see we have a discount fair value gap resting right here. Now let's see what happens when price trades into that. So now, with the daily chart, I will drop down to the hourly chart, and let's go ahead and mark out this structure. Now you can see we have a short-term low right here. That was then swept, creating another short-term low. If this is going to form a long-term low, we need another short-term low on the right side of it. And there we form another short-term low, making this our long-term low. Now, if we're going to create an intermediate term low, I want to look for a sweep of a short-term low. So letting this play out. Now we get a sweep. So this is just a short-term low currently, but I'm anticipating it to become an intermediate term low as price reacts off this level. So now what I can look for is a short-term low to be formed on the other side to continue higher, and then not anticipating price to reach back to this low. So here we reach into this fair value gap, create another short-term low. So then what does this become? This becomes an intermediate term low. So now I don't anticipate this intermediate term low to be violated if we're going to continue to trade higher. Now you can see we create another little short-term low here. We're trading away. Here we form another short-term low. Now we sweep this short-term low. So let's see if we're going to form an intermediate term low. So here we sweep. Now this is just a short-term low until what? Until we form another short-term low on the right side. Now we form that short-term low. This is then confirmed as an intermediate term low, and I'd want to not see this low be violated. Now you can see we get a bit of consolidation, another short-term low in here, and we're expanding higher. Now we have down close candles, a fair value gap here. Now looking at this, you can see how price came in, rebalances this fair value gap, and this is an intermediate term low as well because it rebalances a fair value gap. Now we trade away, so I'd not want to see this low be violated. And there we start to continue higher. So I hope you can see that we have a higher time frame level And when we get a reaction off of it, this is what I'm anticipating to become a long-term low. When we form a short-term low on either side of it, that is then a long-term low. And then I'm looking for intermediate-term lows. After we sweep this short-term low, I'm anticipating this to become an intermediate-term low, and that is confirmed when we create a short-term low on the right side. We then make another little short-term low, another short-term low, waiting for one of these to be swept. And you can see this low actually sweeps both of them. Then when we put in a swing low here, this is now an intermediate term low. I don't anticipate this to be reached unless I am wrong on this assumption we move higher. Now, price trades higher, price comes down, rebalances a fair value gap, creating an intermediate term low, and then it trades away. So let's take a look at this last example here. You can see we have a gap that we reach up into during London. We sweep our Asia highs and we create an up close candle during London. So marking that out as our order block, let's go down to the 5-minute chart and watch what happens when price retraces into here. So as we're moving forward towards the New York session, you can see we reach back into those up close candles from London. Now, here is when I start watching the market structure. So I want to look for short-term highs and eventually a long-term high to form at this level. So let's see what happens. Here you can see we do form a short-term high. Now you can see we get another high here, another short-term high. Now, if this is going to form a long-term high, I want to see a short-term high on the other side of it. We do not get that. 830 creates another short-term high here. Now, I'd want to see if this is going to be our long-term high, to see a short-term high on the right side of it. And there we go. We do form a short-term high right here. So this is now what? Our long-term high. So now, if I'm looking for an intermediate term high, I'm looking for a sweep of a short-term high. So marking out this high, let's see if we get a sweep. So we actually form another short-term high here. Still waiting for a formation of an intermediate term high. And there, we do sweep this high, and we actually sweep this high as well. Now let's see if this forms a short-term high. It does. So if this is going to form an intermediate term high, I want to see a short-term high on the right side of it. And there we go. We form a short-term high here, which makes this an intermediate term high. And I would not expect price to reach back up here before delivering to the original consolidation or sell-side liquidity resting right here. And if you notice, price from this intermediate term high to this low here, reach back up into a premium, into these up close candles, forming the short-term high. So ideally, price then drops down into sell-side liquidity. And there we go. We drop and hit the lows. So this is an example of how you can use advanced market structure when really this was pretty choppy and otherwise not very clean. There aren't really any clean fair value gaps for entries, and that's when I'll use some advanced market structure to find a short-term high to enter off of. I hope this video was helpful. If you did enjoy it, please consider liking and subscribing, and I'll see you guys next time. Have a good one.